All right, for more on the CBN Monetary Policy Committee meeting, I'm now being joined on the News at 10 by Mr. Rewane, the CEO of Financial Derivatives Company, to examine the likely implications on the latest hike in the interest rates by 50 basis points to 26.75% from 26.25%. Mr. Rewane, it's great to have you with us again on the News at 10.
Thank you for having me.
All right, so this is the latest development. This is where we're at, Mr. Rewane,
Yes.
but it will appear we're still battling with the issue of rising inflation. What's the difference this time from what we've seen from the CBN MPC meeting?
I think there's a wrong emphasis. The emphasis is on the 50 basis point increase in interest rates, while the real deal is the asymmetric corridor adjustment. What this means is that banks have been borrowing from the central bank to buy foreign exchange from the central bank. And before now, they were borrowing at about 26%. As from today, they'll be borrowing at almost 32%. That difference of almost 5 to 6% means that the cost of borrowing from the central bank to buy foreign exchange from the central bank has gone up astronomically. And that means a big pool and a deterrent to borrowing from the central bank to buy foreign exchange from the central bank. That should actually reduce the pressure on the exchange rate.
So what are we looking at really? I mean, because based on what the CBN governor said, it's all meant to make things much easier.
In the last 3 years, 12 times they've hiked the rate, 5 times they've been status quo, but only 4 times have they adjusted the asymmetric corridor. This has a bigger squeeze effect on liquidity than the 50 basis points increase there. So this was a very subtle and nuanced way of saying banks stop robbing Peter to pay Paul. Because basically, you go to the central bank, use the money there, use it to buy foreign exchange, and now sell it to the customers, basically a form of carry trade. So what is the impact of this? You see, between July 2021 and 2024, interest rates have increased by 15.25%, and inflation has increased by only 16.81%. So there is some impact there between the relationship between interest rates and inflation. When you add this other adjustment, we should see a better effect. And quite frankly, the whole idea of inflation, if you look at it properly, inflation has started moderating. The inflation measures the rate of increase in prices, not the nominal price. And we will get to that point where we are going to have to discuss what this actually means and what are the stoking factors. But the immediate reaction today was that the Naira fell sharply. The Naira fell to 1687. That is 1,687 to a dollar. It had peaked at 1,915 months ago, but now, and then it stabilized at about 1,500, but this afternoon, it went to 1,687. Why? Because people are not sure of what it means, or whether there's enough reserves to support the currency. So, but there's a knee-jerk reaction, and then there's also medium-term reaction. But this means a lot, because what's happening is that the exchange rate is feeding back into domestic prices. And one of the reasons why this is happening is that a lot of people are going to buy dollars to take advantage of the waiver on duty and for the import window. So there's an artificial seasonal demand for dollars, which has pushed this up. It's only when when those goods come back into Nigeria or arrive in Nigeria, when the prices begin to go down, you begin to see the impact. And we're going to discuss that in a minute. So, initial reaction, no need to panic, but the Naira lost basically about 200 Naira. Now, this is what I was talking about. Banks robbing Peter to pay Paul. They were borrowing at plus 100 minus 300. Now it's plus 500 and 100. The difference is quite significant, right? So, what next? This also may actually increase the foreign portfolio inflows, because that had actually come down. It's expected, even though it's 50 basis points only, the foreign portfolio flows, what we call hot money, has been able to support the Naira so far. But so recently we've seen some of those monies go out of the country. So there's pressure on the Naira in the foreign exchange market. So this hike in interest rates is expected to boost FPIs in August. That's next month. That's when we're going to see the effect. Now, this is the inflation spiral. It was increasing sharply. It started stagnating now, and it's expected to start falling. And when I say falling, not significantly, from 34.19 to about 32%. And then towards the end of the year, maybe to about 28%. That's what you're going to be seeing. But how does this impact things? One of the major stoking factors for inflation in this country is logistics costs. Thank God, Dangote to the rescue. You know, all the argument about monopoly and all of that. The truth is that it was 1,700 per liter. It's now down to 1,180. And this drives public transportation, movement of goods and all of that. So it's a good thing that Alhaji Dangote has come to the rescue. The other thing we talked about is no strike, no drama. Now it's a law, 70K is the minimum wage. So that helps. Now, what does all of this mean to your pocket, to the ordinary man?
To the ordinary man.
Well, we have this import program, and which is it a savior or a poison chalice? Today, if you go back a minute, today, the price of these commodities, what we are seeing is that the price of these commodities are going to drop, or expected to drop, if nobody corners it. That is, rice, for example, current price is 82,000. The expected new price should be 70,000 in September. Wheat flour, 59,000, should come down to 50,000. And beans, which is now 150,000, should come down to 110,000. And maize, which is used for pap and animal feed, will go down for 105. Now, let's look at it. Today, between last quarter and this quarter, a bag of rice has gone from 80,000 to 82,000, up by 2.4%. Beans is a major culprit. It has gone from 95,000 to 150,000, 36% up. Palm oil is up by 9%, from 5,500 to 6,000. Now, eggs, 4,000 naira to 5,500, depending on the size of the egg, it's up 27%. Noodles are up by only 4%. And look at this, yam, this harvest season is just starting. New yams are out. It's gone from 10,500 to 18,000 naira.
That's massive.
That is significant. But what's going to happen after the imported food comes in? We are going to see those prices begin to come down. Hopefully, if it's not cornered. So if that happens and the prices begin to come down next month or in September, you will see the difference, right? And why there's a lag between when policies are announced and when policies begin to take their effect. So this is what is going to happen after the duty waiver. A bag of rice should come down from 82,000 to 70K by September. Beans should come down from 150 to 110. Maize should come down from 105 to 95. And flour should go to 50,000. Hopefully, if things are not cornered. But the full effect of this if you are in different categories, you are the elite, you are the survivors, and all of that. On the elite, international school fees, no matter what happens, will go higher. So you have to look for substitute schools. Well, air travel will stay flat because IATA changed their rates yesterday to 1,690 to $1. And medical tourism, you heard Femi Falana talking about people staying in Nigeria to treat themselves. Medical tourism costs will also increase. So finally, as we go, so transport fares, right, will go up from Lagos, Obalende to Victoria Island, which is now 300 naira, will go to 400 naira, and your house rent is going to go up by about 20%. So next year, as we go to the end of the year, this is final. What next? Food import duty waiver will taper inflation. Dangote PMS will come in on August 15th. It will guarantee supply but not price. New minimum wage will impact inflation only marginally. Higher interest rates will increase savings and help moderate inflation pressure. The naira will recover from 1,700 to 1,500 in September. That's what it is.
That is what it is, indeed.
It is what it is. But you know what? Truth is in short supply in Nigeria. So this is the truth. Thank you.
Interesting. Thank you so much, Mr. Bismarck Rewane, for your thoughts and, of course, analysis on the news at 10. Thank you once again.
Thank you.